when everything goes wrong, which it will go wrong. Just because you have a government backing something doesn't make it any better. It doesn't mean that it's not going to go wrong either. It means it's more guaranteed to go wrong. That will just mean that it all falls on the taxpayer to clean up the mess. New data suggests that Canada could be on the cusp of a massive mortgage default crisis that is starting to emerge in the subprime sector, exactly like what happened in the US before 2008. So let's get right into this and then draw the parallels between what's going on in Canada right now and what happened in 2008 in the US. So private lenders demand delinquent Canadian homeowners pay up. Now we'll get into this article, but I want you to bear in mind here that when you have these people who are delinquent, who are the most likely people to first become delinquent? It's going to be people with private mortgages through these private lenders. So they are the subprime. So when you hear private lenders, when you hear MICs, just think subprime. Okay, so let's get right into this. Canadian homeowners grappling with swelling mortgage costs have become such a significant issue that the government of Prime Minister Justin Trudeau is urging banks to go easy on them, because him just coming out and saying that is going to make all the difference. So Nick, the chief executive officer at River Rock Mortgage Investment Corp, is taking more of a tough love approach, and I don't blame him given the environment that is going on right now in the housing market. Mortgage investment corporations, or MICs, like Nick's firm, are navigating a tricky situation. The surge in borrowing costs has squeezed many homeowners, a problem more acute among MIC borrowers. And this is what you would expect. And we're going to get into the data that comes from 2008, looking in the rearview mirror of what happened there to try and figure out what might actually happen in Canada. And you're just not going to believe the parallels. In fact, you would probably expect it. Most people are very logical thinkers on this channel, I know that. But the companies don't have the resources of Canada's massive banks, meaning MICs often argue they can't afford to let stretched customers skip payments for as long and have to act more quickly to stem losses. So as soon as someone misses a payment, Nick's company reaches out to them to see if they can get back on track. If the answer is no, they deliver an ultimatum: sell now or we'll sell for you. We came out of the gate extremely aggressive last year, he said. When people ran into trouble, we said, look, you can't afford it. Let's go through your budget. Okay, let's sell the house. Let's work together on this, because otherwise you're going to end up with nothing. And I think that's a proactive approach, and I think he's doing the right thing there. So anyway, housing costs. I think not all MICs will survive, Nick said. I don't think they are being proactive on people that are running into trouble. I think they're being very passive, hoping it will get better and the market will solve their mistake. In other words, home prices will start rising again. So that type of denial doesn't end in a good place. And obviously, when you look at the bubble cycle, you would expect that type of denial when you really think about it. Though they claim only about 1.7% of the national mortgage market, such as alternative lenders, have seen double-digit growth in recent years, that's in part because they don't have to administer the federally mandated mortgage stress test. So you wanted to know if there's a way around the stress test? There is, and a lot of people have been using it, evidently, which forces bank borrowers to prove they have enough income to handle the loan if rates go up. And even that stress test, I mean, it's completely ridiculous anyway, if you think about it, because most people can't handle these high rates right now. And they were being stress tested on rates like we have today a couple of years ago, and they can't handle them. I mean, the stress test was completely pointless in my opinion too, and it just kind of shows how broken this is. So with rates currently at their highest level in more than 20 years, many borrowers can't clear that bar, and more are turning to MICs instead. More are going subprime, essentially. Assets at Canada's 25 biggest mortgage investment corporations rose 7.1% in the first quarter from a year earlier, compared with a 6% increase for the industry overall. According to a recent report from Canada Mortgage and Housing Corporation, this continued growth means many more Canadians will find themselves contending with this much less forgiving breed of lender in the years to come. And they even talk about how that actually is impacting housing market, certain housing markets like Toronto, forcing sales. Exact figures on how many power of sale proceedings are occurring are hard to come by, which is ridiculous when you think about the market cap of this housing market and how big the bubble has got. And it's so hard to get data on this housing market. The data is kept so close to everybody's chest. I just think it's completely ridiculous, and it just shows how we're in this bubble when there's that much of data hoarding going on. So exact figures on how many power of sale proceedings are occurring are hard to come by, but there are signs that pressure from alternative lenders is at least part of the reason the housing market has seen more homes listed for sale in recent months. The 3-month moving average of new listings was up 21% in November from March, with the surge concentrated in Ontario, which experienced one of the biggest bubbles when you think about it, the province where alternative lenders have been most active. So that kind of shows you what's going on and how you're starting to see that people are getting into trouble, particularly the subprime component. So now let's go to the NBER report that I've shown you guys many times on this channel, and we'll go through what happened in 2008. So it shows contributions to the housing market bust. You've got prime mortgage, subprime mortgage. You can see the prime mortgage was way higher. You've got FHA, VA loan. That's like your CMHC loans if you think about it. So many studies of the housing market collapse of the last decade and the associated sharp rise in defaults and foreclosures focused on the role of the subprime mortgage sector. Yet subprime loans comprise of a relatively small share of the US housing market, usually about 15% and never more than 21%. And if you think about in Canada right now, you probably have a similar percentage share. It might even be bigger than that because you've got these MICs that might represent around 10% of the share of the market. And then you've got the CMHC that probably represents 15, 20%. And you think about that, the CMHC mortgages, they're subprime mortgages. Without the CMHC insurance, without the private mortgage insurance, these people wouldn't qualify for the loans. Nobody would want to lend to them. That's why the government has to come in with these insurance policies. And I think it's utterly ridiculous because when everything goes wrong, which it will go wrong, just because you have a government backing something doesn't make it any better. It doesn't mean that it's not going to go wrong either. It means it's more guaranteed to go wrong. And essentially that will just mean that it all falls on the taxpayer to clean up the mess. And that's why I'm totally against the CMHC. And I believe it is such a broken institution that should be scrapped. The researchers find that the crisis was not solely or even primarily a subprime sector event. It began that way, but quickly expanded into a much broader phenomenon dominated by prime borrowers' loss of homes. So we're talking particularly about foreclosures. And what you can see is what happened there is you had it start off in where? It started off with subprime. And that makes sense because people with subprime mortgages, they have less available funds, they're less able to withstand the higher rates, and they're more likely to get into trouble. And that's exactly why they didn't qualify for the loan at the big bank in the first place. But what you have to remember is the people who get the loans at the big banks are the majority of people. So when it comes to the foreclosures and power of sales, they will end up being the majority. It's just that it starts off in the very subprime sector, which I would class these MICs as, and then you've got the CMHC mortgages, which are another version of subprime, essentially, in my opinion. So it's kind of crazy. And now I want to go through this because this shows the hilarious part about the Canadian government, and I've got a video coming on this soon. So Canada shelves proposal to eliminate mortgage bond program. So let me just quickly go over what that is. Basically, this is where the government of Canada buys these mortgages from financial institutions, directly gives them liquidity, and bear in mind the government is bankrupt, so any money that they're handing out is printed, so that adds to inflation. So they go to the banks, they're essentially giving them a bailout, and they're buying mortgages from those banks, which basically means that there's more moral hazard in the system, because particularly the Canadian government focuses on the CMHC insured mortgages and focuses on the very risky mortgages. So they're buying all the dog shit, essentially, and then they're packaging them up into these Canada mortgage bonds that are guaranteed by the Canadian government. So if ever there's mass defaults in these mortgage bonds, it doesn't matter. The Canadian government is going to pay out. Those investors are going to get their money, even if it's printed money from the Canadian government. And it's just quite frankly insane. And this market is big, guys. So Canada backed away from the idea of eliminating its $250 billion mortgage bond program, responding to pressure from investors who want wanted the product kept alive. Talking about investors, you mean the banksters themselves. Canada mortgage bonds are securities issued by the federal government's housing agency and are guaranteed by the government, giving them the highest possible credit ratings since Canada is rated AAA by S&P Global Ratings and Moody's Investors Service. Despite that, the notes trade at a higher yield than Canada government bonds. So basically, you have these bonds, and what people need to understand is this is a big thing. The government is coming in buying more mortgages as literally the housing market is deteriorating, as literally people are burning down their homes. The Canadian government is coming in and saying, yeah, we'll buy your shitty mortgages, but they're bailing out the banks, and that's what people don't understand. You know, a lot of people would have not heard of this and they wouldn't have understood it when articles like this came out. But I'm here to tell you, when they do things like this influences lending. It means that lenders are more willing to lend. They're getting liquidity from the government essentially, and they're able to pass on those mortgages to the government or the CMHC. The CMHC packages those up and sells them off to investors with Canada's AAA rating. Did you, as a taxpayer, ask for that to happen? Because I certainly didn't. And the way that influences bad lending, as I said, is a terrible thing long term. But you know, these type of programs, the CMHC mortgage insurance and any private mortgage insurance, all these things need to be banned and scrapped. No politician, nobody's promising this, because this goes against the oligarchy, it goes against the status quo in Canada, and it goes against the banksters as well. The banksters wouldn't like it. They wouldn't be able to get paid their fat bonuses. So yeah, they're actually doing this, and it's not a good thing. The government will purchase as much as 30 billion in mortgage bonds, and that will start in February. In just a month's time, they will start buying mortgages off the banks. It's like a shadow bailout of the system. And I said in the live Q&A we did last week, I said, this is how I think the government is going to operate from now on. It's these shadow bailouts where they're bailing out the system. You just don't even realize, because they do it in sort of a covert procedure that you might not necessarily understand. If you go to anybody in your family and say, do you know what the CMB program is? They're going to go, no, what the hell are you talking about? So, you know, it just goes to show that nobody really knows this is going on. And that's why I'm trying to get attention to it on this channel, trying to help people understand exactly why these things are bad and how they influence bad lending in Canada. And we'll all know that if different programs are scrapped, that we could have at least a better housing market. So anyway, I want to thank you so much for watching this video. If you're looking for a VPN, go to expressvpn.com/marketmania to get around Trudeau's censorship laws and Bill C-11. If you've enjoyed this video, you might like this video here. You might also like that video there. I will see you in the next one. Take care of yourselves, guys. Bye-bye.